Hey, welcome to Travillian Next. My name is Amber Buker, and I'm your host, Chief Research Officer at Travillian. Super excited to be joined here today with my friend and colleague, Brian Love. Hey, Brian.
How's it going, Amber? Nice to
It's
see you.
good. It's good. Nice to see you too. We just got off the road from a super busy month in May of travel, crisscrossing the country. And so I'm super excited to take a few minutes to sit back, think about what we learned, recap a little bit of what we heard on the road. We started off strong. I was in KOP with the team for a week at an onsite before we headed to Finovate May 4th, where I did some speaking. And then you were out at DA Davidson May
Oh yeah,
5th. Then I went to S&P on the 6th, and then we were both back in Nashville for the Alloy Labs event. So
that's right.
I
I
bet
went to
you're
Antarctica as well for a lightly attended community bank conference. No, I'm joking.
quite lightly.
Yes, quite like it was.
Imagine.
It was freezing cold. Anyway, no,
I'm sure you would
Nashville.
have to have special clearance to get there. I hear the ice wall is quite top secret, so
That's right.
right.
I was in Nashville 2 consecutive weeks, and I joked to some people that my wife thinks I have like a secret family in Nashville because I was there so much. It's not truthful, Sarah. If you're watching, it's not true. But anyway,
And you
it
didn't
was
take
a lot of
her
fun.
on a single Nashville weekend, so, I
We're
mean,
trying to work something out coming up. I think we might try and go to New England at some point and Colorado at some point. So we'll get
that'll
there.
be awesome. That'll be awesome. Well, I
Let's
know
move
that
away from spousal advice off of this
well, I
webinar.
was gonna say it might be a while before you get out on the road again, because you've been out and about so much, and so I wanna hear a little bit too about what's been happening since you got home, how have you
Yeah.
settled back in?
Well, I will say we have, I mean, the banking fintech team here is on fire, not literally, but I don't know, this last 6 to 8 months have been some of the busiest periods I've ever seen in 10 plus years of being in this role at this firm. And we've got a ton going on in a lot of different geographies. Almost all our C-suite searches. We've got CEO searches happening in the Pacific Northwest. We have a fintech charter CEO search that we're doing. We've got a multitude of CFO and finance searches that are going on. So getting out and about is tricky when we're this busy, but it's also incredibly crucial to learn more about the industry, to see our friends out there, to see our clients and potential clients. So things have been extremely busy, and this small barometer from the Travillian world, hopefully, the people watching, I do feel like there's a lot of confidence out there. So uh, and then, of course, coming back from these conferences, I just feel a lot of juice from meeting people I've never actually met in person. The Alloy Labs conference was really, really something different and something fun. A lot of great mind shares about technology and operations and management. And then the DA Davidson conference was great. Just really great publicly traded bank executive teams there that were very impressive. And we'll talk a little bit more about the things that I gleaned. How
Yes,
about you?
let's do it. I mean, let's
Yeah,
no, enough about me. Let's get into it for everyone. Let's
let's
dive
do
in.
it.
But the agendas for a lot of conferences have a lot of overlap because that's what conferences do, right? At one level, they're meant to be the high level industry conversation that we're all having. And so there's a lot of overlap. But what I want to talk to you about is what surprised you from the road.
Yeah. Well, I had not actually been to an investor conference before this. So the DADCO, if you're in the know, DA Davidson companies, DADCO was really kind of an abbreviated conference for, speakers and panels, et cetera, that were terrific. There was Brent Beardall from WaFd, Jerry Back from Bridgewater Bankshares, and Scott Kingsley from NBT, which all three of them terrific CEOs. That was kind of their keynote session to start the day. And it was terrific hearing about the different banks, how they've grown, how they've used M&A, how they've gotten in and out of different asset classes, how they've, stolen talent from disruptors, things like that. So that was awesome. Um, what I was, I guess, what I was kind of surprised walking around that room at my first investors conference, and pardon me, half the day was banks being spent it with investors. So I was just kind of milling around and having some fun, talking to people I had never met in person. But there was a quotient, Amber, of young leaders in the room. And again, D.A. Davidson was mostly publicly traded banks, and there's only a few hundred of those in the country. And I saw a lot of young leaders, and it made me feel pretty good that a lot of these banks are giving shots to the younger generation, people who may not have been ready on paper, but are now ascended into the role. I think there were at least, I kind of tried to put a number to it, 5 or 6 CFOs of banks that were 5, 10, 30 billion in assets that had CFOs that were in their 30s, early 30s.
Wow.
And that's amazing, right?
Yeah.
And then there were, I think, 2 or 3 that had bank presidents, maybe not CEOs, but presidents, obviously a pretty clear succession, that were in their 30s and 40s. So these are always the unicorns that we're looking for when we do external search. Wait, hold on. Hold on. Somebody wants to say something.
Oh, you're not going to bring out the unicorn, are you?
This is my what do you call this? My what like the dog that you bring on the airplane, my anxiety
Emotional
unicorn.
support. Your emotional
Yeah.
support. For those
Uh,
who are not watching on YouTube, Brian has an Eagles branded football Eagles, a Philly Eagles stuffed unicorn. It's white. It has some green tufts and it's galloping across your screen now. So not that unicorn perhaps, but it is really good to hear that there was a
yeah.
lot of young talent on the floor, Brian, because A, that's something that we love to hear as executive search firms. But
Yeah.
B, I heard it from the stage multiple times. The number one cause of consolidation in our industry right now, unfortunately, is folks just aging out and not
Yeah.
having succession planning in place. And so we've been hearing a lot more requests around that. It's definitely becoming a bit of an issue. And so I'm really glad to hear that you got a different vibe at that event. That's very positive.
Yeah, and by the way, I am such a fan of this industry, so when I see it, I go like right up to it and I shake their hand and I say, "Oh my God!" And chances are I know them or I know their CEO, but I just like shining lights on it, and I don't want to cast any shadows on the well tenured executive teams because they're kicking butt as well. But it's it's nice. It's an older skewing industry, and I think there's signs of life there. And I was pleasantly surprised by that. So yeah.
Good. Okay. Well, I mean, for me, I was pretty surprised that a slide came up during the S&P conference from S&P data that showed that 40% of banks are not currently preparing for stablecoin in any fashion. So what that meant in that particular metric was that there is no strategy owner on stablecoin at the bank. There is limited internal awareness about what it even is, and there's no resource allocation toward it. And so at first I was surprised because I was like, what? 40% aren't even thinking about this. But then I took a step back outside of my little fintech bubble and I thought, oh, wait, this actually is not surprising at all because the main use case for stablecoin, when you ask anyone these days, is cross border payments. And
Mm,
that's just not something that a lot of community banks do, right? Um, that's just not something that's in their typical, certainly not in their priority purview, right? And it's not something that they do a ton today. Like international remittances is just not something that a typical community bank is going to have
right.
a big appetite for. So when I took a step back again, I realized it was not actually that surprising that banks aren't actively preparing for stablecoin. But what I will say that I think is more exciting and more interesting and more useful to banks is tokenized deposits. And
Mm.
that's the side of the coin that I think people don't talk enough about, don't understand enough about, because that's where you can really unlock some benefits in any kind of bank through smart contracts and things like that. So that was a little bit surprising to me. What
Yeah,
about,
well,
yeah,
Amber, I was just going to say, I feel like this is an industry that has slow followers and adaptation, right? So it's almost like, oh, let's see what happens over there before we even think about it. And there's a nice grouping of banks out there, tech forward banks. Some of them are pushing a little bit more into tokenized deposits, stable coins, et cetera. Um, so I kind of feel like there's like a wait and see. I mean,
mhm,
is that what this comes to you as?
I think so. I think
Yeah.
that's definitely, which, it makes sense, and we always have things that we don't know where they're gonna land, especially when legislation's involved. I mean, we had Regulation 1033 on data that people were kind of, scrambling, like figure out what to do. And then we're kind of on hold. And so I think the regulatory framework is still shifting. We're still waiting to see what's happening. There's certainly a lot of banks that are being active publicly in terms of advocacy in that realm.
Yeah.
But if that's not your bag, if you're not, if you just kind of rely on the ABA and your usual AFC, like those kinds of organizations, and you're not super activist in that way, then no, I think waiting and seeing is where most folks are.
Yeah.
Yeah.
Which is, par for the course.
What about good ideas? New ideas? Any of that?
So we kind of made a friendly bet to not talk about AI on this call just because it's like ad nauseum.
Yes.
Um, I actually removed A and I off of my keyboard, and didn't do me very well. But I did hear some interesting ideas around AI in the boardroom.
Okay.
Yeah, there was someone from PwC up on stage at one of my conferences at the DADCO conference, and he mentioned that AI maybe could be almost a board member of its own, which I just thought was everyone at my table was like, "What did he just say?" Like it was just weird.
It's a different idea for sure. I bet it caught a lot of people off guard.
Well, I mean, sure, you can't legally have an
Right.
AI board member, but like if the job is, you know, I don't know, asking informed questions and stress testing things and adding a layer of governance, flagging risk, like doesn't that isn't that what AI kind of is able to do pretty easily if you can input it with the right things? So the more I thought about it, the more it actually didn't seem like science fiction. And I think also with board meetings that sometimes can be full days or too long, it could help it shorten, make those events a little bit more efficient. So that was one thing that caught my eye and my ear for sure.
Nice.
How about you?
So I think one of the ideas, so it's not so much an idea as like a framework that I really liked. At the Alloy event, there was a discussion, and just so everyone knows, Alloy Labs is a membership group, and it has close to right around 100 banks that are very tech forward banks. And so when they get together as a membership group, they want to be able to speak freely. So they operate under Chatham House rules. So we never talk about what banks were saying this or who was in the room or who was saying what. But we can talk about like the general theme. And so the general theme of the conversation was that there's a difference between a debt mindset and an equity mindset. And the premise of the conversation was that a lot of times banks operate in a debt mindset because they have to care about credit quality. They can't have losses. They have to protect what they have. Whereas a lot of the fintechs that they're sometimes trying to partner with come at things from an equity mindset, which is different because the equity mindset says we don't mind if we have to take some losses now because we know that in the future, we have this bigger vision that will work out. And it struck me for a couple of reasons. The first one is that it made me think of the presentation that I had just given at Finovate, which was kind of along the same lines. I basically took a first principles look at bank fintech partnerships and said, okay, what is a bank? What is a fintech? And then what are the ways that they're complementary, which is the thing that a lot of people talk about. But the thing that I focused more on, which is kind of ironic being at Finovate, a conference that's all about partnerships, was I focused on how are they different and how do those very fundamental differences in the two types of organizations shake out in how we operate and how we partner. And so banks obviously are focused on longevity, societal mandate to keep our money safe and create an economy by putting assets to use. That's a
Mhm.
very different mandate than a fintech, which is a commercial operation that's designed to grow at all cost, just completely fundamentally at odds. And so it's interesting when we try to have banks and fintechs partner together. And again, we're always focused on the positive complementarity, but a lot of people don't give as much attention to the ways in which these models are just naturally not aligned. And so, one fun thing that I did with that presentation was I put together a diagnostic that actually tracks the fault lines. There are 5 of them along which bank fintech partnerships tend to fail. And so that's live on our website. It was just a fun thing for the folks that were in the audience. But if anyone wants to take it, you can find that at Travillian group.com/fault line diagnostic with dashes fault dash line dash diagnostic and then a forward slash. I'm sure we'll link that in the show notes as well. But yeah, I thought that was an interesting framework for looking at bank tech partnerships. All right, so that's enough about what we heard from the road. I want to look ahead to the future quickly. Given all the vibes that we felt on site, Brian, what do you think is ahead for H2 of 26?
Well, I got a lot of confidence leaving these. And again, some of it was the juice of just being in the room with a lot of the great decision makers in our industry. But, you know, credit is holding up extremely well when, 5, 6 years ago, everyone thought that was going to crumble. There's really not been a lot of losses. The shrewd and smart leadership of these banks has been able to navigate quite a bit of different things over the last 6 years, especially COVID, Silicon Valley Bank, et cetera. And, things are prospering for the most part. Brent Beardall, I don't want to put like words in his mouth, but he said something to the effect that the Wild West, M&A is going to be the Wild West over the next 2 years because people are probably going to push to get deals done under this administration. By the way, Brent will be appearing on a future episode soon of Travillian Next. Plug alert. So I think there's confidence there. I mean, again, I don't know how you look at M&A. We do a lot of investment bankers watch this show. They want deals to be flowing again. I do get the sense that that was the conventional wisdom of the room in Nashville there. Obviously, the vibes are that I do think that banks are taking succession planning seriously, just based upon the amount of work that we're doing with succession planning and finding fresh talent. And what I saw in the room of a fresh crop of leaders. By the way, a lot of younger attorneys, advisors to the banks, which also tells me something too. And it's just a lot of passion out there for what we do. I mean, I'm on the periphery. I used to be a banker, but I'm on the periphery now, but I kind of feel like I am part of this community. So are you, and so are everyone who's listening and watching. And there's just a lot of passion out there, and I still think it's there. It's been beaten up and slapped around for quite some time, and it'll probably continue to be that way. But we all have passion in helping our communities and helping our clients prosper. And so I think that's the vibes. I mean, I could probably add some negative things too, but I'll just
No,
leave it
I think we end on the
there.
positive vibes. I love that.
Yes,
Brian loves
definitely.
Amber loves banks. Everyone listening to this podcast most likely loves banks, and it's going to be a heck of a great second half of the year for
That's
all of us.
right. I agree with that, and
Mark
I
it.
love those vibes. I love those
All
vibes.
right. Thank you so much for joining us, and we'll see you next week on Travillian Next.
Thanks, everyone.